So hello everyone, today we will talk about indicators. A lot of people ask me about indicators, which ones we use on TradingView, indicators that we recommend both for beginners and for experienced traders. I will show you the ones I personally use, so I think many of you will find this video very interesting for educational purposes. Don't forget that also we have the Alpha community, our private community, where we publish all the most important events in the financial industry every single day. We share a large number of setups with entry points, exit points, and stop losses. Here we explain assets analysis in detail. And look, for example, yesterday we closed a huge position with 142% of pure movement. That's without leverage. With leverage, it's 7,000% profit. This is an excellent profit. We closed together with the members of our community, and we also took the same position in short, so we are still in profit. And again, we found how to catch this position in the long direction. In general, while we are trading here and taking profit from the market, I still don't understand why you haven't joined yet. The link is in the description under this video, and we are waiting for you here in the community. Okay, let's now take a look at the indicators. Let's move to the main ones. People often ask me what these fractal points are that I use. Let's start with them. Let's choose some asset with a clean chart. A bit of information for beginners. A fractal point is a liquidity cluster zone. How do you define it? It's a 3-candle pattern. As a rule, the candle in the middle must be either lower or higher than the previous and the next candle. So, for example, here we have a fractal point because the previous candle is higher and the next candle is also higher. Here we also have a fractal point because the previous candle closed higher and the next candle is also closed higher. Here we have a fractal point because this candle is higher and this candle is higher. And here we have a fractal point because this candle is lower and the next candle is lower. What is fractal point? Liquidity. Yes, it's a cluster of liquidity. As a rule, late long traders, as in this local case here, open their position and place their stop losses behind this low. The same with local short traders, who open up their positions and place their stop losses locally behind the level of this liquidity at these fractal points. So, fractal points are, in simple words, liquidity zones where traders most often hide their stop losses or where their liquidation positions are located. Accordingly, for us traders, it's necessary to know these liquidity points, fractal points in advance, so we can identify them ahead of time and apply them in our work. This indicator, which is called Wick.ED Fractals, allows us to quickly determine where our important fractal points are at the moment. So you see those points that we identified appear here as triangles. You can choose any shape you want. It doesn't have to be a triangle. Choose whatever you like, but it's more convenient for me to work like this. And here I immediately understand where liquidity is concentrated and where the price will most likely come. As you know, assets and their prices in our market move from liquidity to liquidity, so we absolutely need to know this in advance. Good. We see that overall these fractal points allow us to detect compressions. Yes, like here. For example, a cluster of liquidity points, the maximum cluster of long traders, stop losses. Accordingly, at these fractal points, there is essentially a magnet for the price. So what do we see next? We see how the price removes this compression as much as possible and interacts with our fractal points. The same story is here. We see fractal point here and here. Accordingly, this is cluster of liquidity. And the price interacts with this liquidity and removes all these fractal points completely. The same thing happens here. Fractal points, a cluster liquidity zone of long trader stop losses, and the price interacts with these liquidity points with our fractal points, makes a manipulation and triggers the stop losses of early long traders. Accordingly, we need to know in advance where these fractal points are located, and so that we don't do it by eye, as I'm showing here, there is an indicator you can see. You can pause the video and type in TradingView in the indicator section, Wick.ED Fractals. I personally use this one. You can use any other, but it's important to know that there is exactly a 3-candle pattern, and therefore it's the most effective setup. Next, let's go in order. Volume profile. Here I think we don't even need to talk too long, because this is an indicator that shows the most traded liquidity zones. It looks like this. It shows where the highest traded volume was. This level is the one the price most often reacts to in one way or another. You can look here at what volume was traded at this level that the indicator selected for us. Here is, as you can see, a zone of the least traded volume, where we are currently in terms of price, and the price interacts with this area as well. Where we have the least traded volume, the price usually moves into this area and fills these gaps. Good, we figured that out. Let's move on. This, by the way, is our own indicator. We can talk about it in a separate video. I think you will also find it interesting. This is really a topic for a separate video. RSI, I think, also useful. This is a standard RSI showing when an asset is in the overbought zone, and then you can start looking, for example, for short signals to open positions in the opposite direction to look for counter volume. Here we can already identify zones from which we can look for short positions. As we know, when the asset is in the overbought zone, it's overheated. Accordingly, we can highlight zones with which the price may interact and provide selling volume. Here, accordingly to our RSI indicator, we see that the asset is approaching the overbought zone, the overheated zone. And accordingly, with our indicator that helps us identify our fractal points, we can detect that the asset may come and interact with our fractal points. Thus, we can already look here for reversal zones where we can get counter volume for selling. In this case, where we can build our short positions in order to take our profit when the asset interacts with our fractal points. That is, here at the liquidity points of the majority, we can set our targets at these fractal points. Okay, moving on. Let's clear the chart. The next indicator is smart money concept. Most often, based on my setups, you can conclude that I really use the smart money strategy. And in many ways, this is true, because this concept allows you to clearly determine the trend, identify the zones used by large participants, big players, funds, where they open their positions, where accumulation and distribution occur even on local time frames or global ones. This strategy really works. To use this concept productively, you need to identify zones where the order block is located, where the structure break is found, where rejection blocks are, and the blocks that truly have significant weight and meaning. This indicator immediately determines for you where, as we see here, the order block is located, where the first problematic zone for long traders are, the ones the price interacts with and gets a real reaction from. As you can observe from our long order block, the price indeed moved in the long direction and came to our first problematic area in the form of a short order block. But nevertheless, you see that here there is indeed a break on the lower time frame in the long direction. We can conclude that the price may once again interact with the upper liquidity, whereby the way a fractal point is located and received additional selling volume. And here, in the long area, we can look for a reversal model. As you can see, generally, that if you trade intraday, asset prices most often get stuck in some kind of consolidation, some sideways range, where we can essentially play ping pong. From the long zone, we open long position until our problematic area, the short order blocks. From the short order blocks, we open short positions toward the zones of interest. Accordingly, we get this ping pong effect and sideways accumulation. And knowing in advance that we also have the indicator with fractal points that we use, we essentially know exactly where within our zone of interest the asset can come. Using our smart money concept, we marked out an order block. The indicator highlighted it for us. Through our fractal points, we detect that there is a liquidity cluster here. Accordingly, it's not a problem to lock for a long position here towards our problematic areas. Is this interesting? I think so. For example, place your limit order here, place the stop loss behind the fractal point that created the manipulation, and take profit in our problematic area for long traders. Accordingly, here there will be a liquidity cluster. Here is also a fractal point, a liquidity cluster, which will also interest us. Good. Such a position gives almost 1 to 3 and a great reward on Ethereum with 8% of pure movement. Taking such a move is quite interesting. Let's even see whether such a scenario plays out and show it to you in the next video, or you can observe it in our alpha community. Great, we are covered smart money concept. You can also configure the indicator to show you what you want. You can choose for it to show you imbalances. It immediately highlights the imbalance that has not yet been tested. Accordingly, after interacting with a fractal point, the price may move toward the imbalance, get a reaction from it, and then come to the fractal point that we identified earlier. And in this way, you can define a plan for yourself within the day and monetize it. Next, sessions. Most often you may hear me say that we start working on building our positions closer to the New York session, closer to the London session, or I say when you should usually close your position, when the New York session ends and the Asian session begins. To determine this, easily use this indicator. I'll now disable all others so they don't interfere. This indicator, as you can see, immediately shows you which session we are currently in and trading the asset in. You see clearly highlighted the New York session, the Asian session, and the London session. Okay, and let's return to the original question. Why do I say that most often we will be building our positions during the New York session or closing our position when the American session ends? Just look carefully at the volatility we have during the New York session when the US stock market is open. And look at the volatility we have during the Asian session and the London session. There is a compression. Even with the naked eye, you can see the volatility. The New York session gives us right now volatility of 8%, the Asian session 3%, and the London session up to 2%. Accordingly, this is an answer to why I most often trade during the New York session, because volatility is higher. And therefore we can take more profit and increase our deposit more significantly. Okay, the next indicator, PDH, PDL. This may also be useful for everyone. This indicator allows you to determine in general where we have lows and where we have highs. You can also use it together with the indicator daily, week, monthly, yearly opens. These are important levels, the opening of the day, week, month, and year. Why do I emphasize these indicators? Because most often assets still interact with these levels and always get a reaction from them. For example, now we see how our daily candle opened at the level of 3058, and I assure you that during the day the asset will interact with this level. Here you also see that this level coincides with the weekly candle's opening level. How can this be applied? You can also place your take profits or limit orders on this level depending on the position you take, because most often the price reacts to these levels one way or another. Let's take, for example, the daily chart. Let's clear everything we have here. Let's take our indicator with the levels, a 4-hour period where it is most visible. Here is the monthly opening level. The price interacts with it repeatedly. We see it here, we see it here, we see it here. The price comes to this level, interacts, gets a reaction, consolidates above this level. It trades sideways, returns to this level, interacts with it, gets a rejection, and consolidates above this level. It trades upward, but lacks enough fuel to continue the move higher. Accordingly, the price returns to this level, tests it, interacts, gets a reaction with manipulation and liquidity sweep here. and receives long volume for buying. After that, the price also consolidates above this level and forms new levels, the daily and weekly opening levels. These are additional factors you can see. I use them often because these are truly levels where the price reacts, and it's worth applying them in your trading system. For now, that's all, guys. Pause the video, screenshot these indicators for yourself, use them, rewatch the video carefully to understand how to use them and apply them in your trading system and increase your trading deposit. Thank you for your attention, and the most useful links are in the description. Bye.